Happy New Year, everybody. We are just a few days into 2024, but Tyler and I are doing a little bit of buying already. If you're not familiar with us, we are both contributors for the Motley Fool. Tyler is an expert on all things energy, materials, and real estate. We will hear from Tyler in just a minute. Before we get into things, take a minute and click subscribe to my channel if you don't already. And also check out the link you see on your screen for a special message from our sponsor, the Motley Fool. You get the top 10 stocks to buy right now, and it's the best way to support this work we're doing on YouTube. So I have two that I've bought recently, so I'll throw one of them out now and then kick it over to Tyler. And it's one that I talked about last week in a video that I'm going to plan on buying. It's an ETF. It's the VNQ, the Vanguard Real Estate ETF. This one shouldn't surprise anyone because I kind of already told you I was going to buy it, but I did. Now it is part of my portfolio. I won't go through the full thesis here, but generally real estate underperformed the market in 2023. I think it could be a big beneficiary as interest rates normalize in 2024. And I like kind of the index approach here because I do own about 10 different REITs as individual stocks, but they're generally smaller ones. The VNQ, it's a market cap weighted ETF, so it puts more of the assets into the largest REITs in the sector. Companies like Prologis, like American Tower, like Crown Castle, a lot of the names that have been really beaten down, but that I'd like to own, but I don't really necessarily want to pick or choose one of those. It's a great dividend stock, kind of a way to put my income portfolio on autopilot, which one of my big goals in life is to build up an income portfolio by the time I retire. So I'm kind of more ETF oriented this year than I have been in the past, even though I am still buying some individual stocks. But that's one that I already bought in 2024. Tyler, what have you bought recently? I know it's one that you've named before, and tell us the name and the ticker symbol.
Sure. Just on VNQ, to add on to that, I all of my I split my children's what you would want to call them, they're not Roths, whatever, the savings plan that you can do for your kids. I have
The
they're basic.
UGMA.
Yes, UGMAs. I have mine halfway split between VNQ and VOO, which is the S&P 500. So I'm on you there. I like to keep the ETFs to my kids so my hubris doesn't interrupt their wealth creation over the long time. But the company that I have recently purchased is Ternium. The ticker symbol is TX. It trades on the New York Stock Exchange. This is the largest steel producer in Latin America. It's even though it's technically based in Luxembourg, its headquarters is in Buenos Aires, but more than 50% of its actual business is in Mexico. And that's kind of the big appeal for me is one thing that you and I have been talking about offline and kind of with us and some other analysts at the Motley Fool. We've been talking a lot about nearshoring and how that's going to impact real estate, especially across North America, specifically Latin America. And for me, Mexico has been one of the target markets I've been looking at in terms of nearshoring, because it's an extremely competitive cost on a cost basis, not only just in relative terms with transportation, but also in absolute terms compared to like Chinese manufacturing today. And we're seeing a major manufacturing boom in Mexico as a result, specifically in some of the border states like Monterrey, Mexico, Nuevo Leon, where Ternium is one of the major suppliers. It's a huge supplier to the automotive manufacturers in the region, as well as, big engine manufacturers like Pratt and Whitney, Cummins, John Deere, places like that are huge manufacturing hubs in Mexico that are supplied by companies like Ternium. They have about $3.6 billion in capital spending that they're planning on deploying specifically in this region to expand into automotives and high strength steels and a lot of kind of that higher quality steel that's required for precision manufacturing and some of the, some of the more detailed things that you can do with steel that aren't necessarily like construction rebar. And so with this in mind, I see Ternium as a very unique opportunity to get exposure to that at an extremely cheap price, because right now Ternium trades for about 0.7 times tangible book value. It has tons of cash in the books. It's not, one of those like, oh, you hear Latin America, you can be like, oh, this thing must be levered to the moon and be in some sort of financial trouble, but it's not. It has the balance sheet looks pretty good, tons of cash, throwing off lots of cash right now in terms of cash generation, and trading for an extremely cheap price. And so, with all of those things in mind, Ternium looks really attractive to me, and it's something that I've put a considerable position in the past couple of weeks.
I know you had raised a bunch of capital by selling, 38
A lot of
stocks or
things.
whatever in late 2023. So you imagine you allocated a fair portion of that capital to Ternium, is what you're saying.
Yeah, I put a lot into Ternium. I've started to concentrate on my portfolio, and I've really been looking for a lot of cheap assets right now that, maybe we'll call it. I think the you know, growth is going to kind of fuddle along here for a while. I don't see like us heading into a drastic recession. And so I want to just buy cheap assets that are going to probably do well over the next several years. And I thought Ternium was definitely one of those.
All right. Well, another stock I bought, and I'll keep this kind of quick and then we will wrap it up, is SoFi. Tyler's heard me talk about SoFi a few times. I like it right now, especially now because I'm sure Tyler is going to check their chart as soon as I say this, but it is down big today because of an analyst downgrade. No other reason, just an analyst said that he sees more downside than upside right now and that the stock has run a little bit too far too fast. I never recommend trading on analyst downgrades or upgrades, especially in the direction that the analyst tells you to go. It's usually you're just not going to get a good value. Um, so I like SoFi even more now than I did before it went down by, I think it was 13% last I looked. Um, it added 1.3 million members to its business in the past 2 quarters alone. It anticipates adding at least 1 million per quarter for the duration of 2024. And that would take it, it would add a lot of efficiency to the business. SoFi is still a very high growth bank. It's actually the fastest growing bank in the top 100 in the United States right now. It expects to report GAAP profitability, not the adjusted stuff, GAAP profitability in the fourth quarter and going forward. And it could be a big beneficiary of lower rates. SoFi has been loaning out money at elevated rates if its deposit costs come down, because remember, SoFi is a real bank now. They went from zero at the beginning of 2022 to almost $16 billion in deposits now. That should continue to grow substantially. Their deposit costs will come down. Their portfolio is still going to yield a lot of money because they've been making loans in a high rate environment, and it should help their margins even more. So I really like SoFi right now, even more so than before. I think investors are going to get a very pleasant surprise when they report earnings in a few weeks, especially when it comes to the profitability, because the expectations aren't that high. I think it's like 2 cents a share analysts are expecting. But their execution couldn't be better. They keep adding members. I'd love to see them continue to bring their acquisition costs down. But that's really my only negative spot about the company. But if that acquisition cost makes them into a big bank at some point that is self-sustaining and creates its own marketing funnel and stuff like that, then great. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.